Hey guys, Joel Frank here, market analyst for YouTrading, and in today's video we're going to be talking about technical indicators and sort of how you use them. It's one of these educational videos that we do sometimes, and this video is going to be a little bit different to the ones I've been doing in the last couple of weeks on Fridays, because instead of delving into one specific technical indicator, I'm going to be talking about how when trading, what you should really be doing is looking for a confluence of multiple technical indicators combining to send a similar signal, so that you can sort of increase your chances of engaging in a profitable trade. So I've seen a really good example of this play out this week. So let me just talk about what that example is. Okay, got the S&P 500, or this is a CFD that tracks S&P 500 futures, 1-day candlesticks, and you can see that this moving average here, which we've got here in blue, that's the 200-day moving average. Well, that's your first technical indicator. Okay, we found resistance at this 200-day moving average. But we've also found resistance at a trend line, or roughly so, in this area. You can see that there's been selling ahead of this trend line from the early January. Well, that was actually the record highs, then the late March highs. We've also found resistance there. And then if you look at the relative strength index, which some people look at to see about whether markets are becoming overbought or oversold, you can see that that also entered overbought territory earlier this week / at the end of last week. Okay, so that's three technical indicators all combining, and as it's played out so far, if you had sold the 200-day moving average, thinking about these other two indicators, well, then that would be playing out as a pretty good trade. Now, it looks like the S&P 500 is going to continue to fall until we test support around 4,200. Okay, whether we collapse through that support and continue moving lower, or whether we bounce, get the arrow, whether we bounce and break through the downtrend remains to be seen. A lot of people think that we are still in a bear market, and that this recent rally from lows, big rally from lows, but a lot of people still calling it a bear market rally. What do I think? Well, in terms of the fundamentals, I think a pullback is justified, especially when you have such a big move. But the macroeconomic backdrop, in my opinion, has improved since we were at these annual lows in June and July under 4,000, because inflation in the US does appear to have peaked, and the data that we've had since June suggests that the US economy, obviously we had that GDP data saying that it was in recession in the first half of the year, but at the start of Q3, the data suggests that the US economy continues to grow robustly with a strong labour market, and with survey data like the ISM data and all that other stuff looking fairly robust still. So that's a positive development on the economy side, but there's still a lot of people concerned about Fed hawkishness. Okay, Fed speakers in the last couple of weeks, they're still talking about the fact that the battle against inflation remains far from won, which is true, because US inflation, although it's peaked, it's still clocked in at 8.6% year over year in July. That's very, very high, and core inflation is still very, very hot. So yeah, markets are still worrying that the Fed might need to take interest rates to 4% or potentially higher next year, which does really risk sending the US economy into recession. So we still do have these worries playing on our mind, but I think as long as the inflation outlook in the US continues to improve, inflation does gradually move back down towards the Fed's 2% target in the next couple of quarters, then the downside should probably not be as bad as what we saw. We saw this massive sell-off here in June, and we saw these very, very rapid sell-offs here in May and April. I think as long as inflation is getting better, then hopefully things won't get that ugly. But remains to be seen, guys. Hope you enjoyed the video, and I will see you all in the next one.